ANSI Update Number 139. Fannie Mae Guide Update. Number 146 June 2014 Fannie Mae, ANSI Update. Number 139 Section I. Introduction. The financial system has changed many times since the Great Depression of the 1930s, but changes to appraisal practice have tended to lag. Prior to the Depression, home financing was generally restricted to building and loan associations, B&Ls, similar to that seen in the movie, It's a Wonderful Life. The loan was characterized by 75 to 80% loan-to-value ratio and an 8 to 10-year amortization. Typically, the young couple lived with mom and dad until they could afford a lot, which would often be the equity down payment. Appraisals were generally a simple letter prepared by a loan officer. In 1934, Congress created the Federal Housing Administration to provide low down payment and lower monthly payments through longer amortization of loans. The B&L would then send the necessary paperwork to the FHA, which would issue an insurance certificate. An insurance premium would be added to the monthly payment, which would be collected by the B&L monthly and forwarded to the FHA. The FHA would use a simple appraisal prepared by an employee or contractor. It was thought that the B&Ls would pursue this program aggressively. However, for some reason this did not happen. Not giving up on the concept, in 1938 Congress created the Federal National Mortgage Association, FNMA, a federal agency to purchase FHA-insured loans. This created the mortgage banking industry in the U.S. Real estate brokers and others saw the opportunity available and created mortgage banks. These banks, different from commercial banks or B&Ls, specialized in mortgage lending, placing most of their loans with the FNMA. Many also developed correspondent lenders, such as insurance companies, but their main investor was FNMA. This system of mortgage banks originating FHA loans was expanded with the GI Bill in 1944 so that FNMA could purchase VA guaranteed loans. Meanwhile, the savings and loan system focused almost exclusively on conventional loans. The S&L was restricted to a specific lending area and to relying on its own local depositors for funds. The S&Ls were therefore restricted in their lending. The mortgage bank, however, could originate loans anywhere within the country, and if necessary to service the loans adequately from a distance, could sell the servicing. This system fueled the tremendous home construction boom of the post-war period. In the 1960s, however, it was determined that many areas of the country were not adequately covered by S&Ls. With some pressure from home builders and other stakeholders, Congress decided that FNMA should be permitted to purchase conventional loans as well as FHA, VA. To do so, it was considered necessary to privatize it, making it a private stock company. It was provided with a 21-member board, 5 of whom were to be appointed by the president and the balance elected by shareholders. It became a